What's up, everybody? It's Levi from Wall Street Survivor, and not gonna lie, at the moment I'm a little bit frustrated. I mean, I know that finance and investing isn't everybody's cup of tea, but as somebody who's passionate about teaching people about the stock market, it's honestly really hard to find good information on the internet. So welcome to the Survivor 101 series. This is a 10-video series introducing you guys to investing in the stock market. This first video, Stock Market for Beginners, is supposed to introduce you guys to the stock market on the most basic level. A lot of the videos out there titled Stock Market for Beginners are like 20-40 minutes long. And that's just way too much to ask of someone who's just trying to learn a little bit about what stocks are, what the stock market is, and figure out the first steps to investing. Which is why in this series, Survivor 101, we're going to talk about the stock market in bite-sized pieces, 10 short and simple videos that'll help you guys set up your financial future. So as you know, today's video is called Stock Market for Beginners. In this video, I'm going to explain what a stock is, what the stock market is, how you can go and buy stocks, why anybody would ever want to buy stocks, and the benefits that they have to investors. And then at the end, we'll talk a little bit about building your stock portfolio, including some ideas of what stocks you should buy to start investing. In future videos, we're going to talk about investing goals, building your risk tolerance. We're going to look into some of the brokerages that you can buy stocks through, and I'm going to walk you guys through step by step on how to start investing. The goal is to let you guys in on the investing world without using all the financial jargon that usually comes with it. So make sure you smash that like button, subscribe to our channel, and keep watching the videos that come out in the Survivor 101 series. But now let's break it down. What exactly is a stock? Okay, so imagine a business, right? When we usually think of businesses, we usually think of maybe one owner or a small group of owners. These owners have what is called equity in the company that they own. Equity just means that the owners have ownership and that the equity has some sort of dollar value. For example, when I was 13, I started my own mowing company. I had my clients, I had the lawnmower, the weed eater, the truck, and the trailer, and so in that case, I owned the company and operated it by myself, so I had 100% equity in my lawn mowing company. Now, after a summer of doing lawn care work by myself out in the heat, I decided that I wanted to bring in another person. He also had his own clients, his own mower, his own truck and trailer, and I offered him 50% equity in the lawn mowing company to help me run my business. Theoretically, everything was split down the middle, and that means that he took home 50% of the profit, and if we would have sold the company together, he would have earned 50% of whatever the sale price was. Now, unfortunately, I made the decision after a summer of working with him to sell my equity back to him so that he became 100% owner of the company, and I decided to go work for Chick-fil-A. And what that meant was in 4 years when he sold the business, I didn't get any of the money from it, and he ended up getting 100% of the money and used it to pay for almost his entire college tuition. Yeah, well, now that we've talked about how poor financial decisions I make with equity, I can explain what a stock is. Well, a stock is just a small piece of equity. When a company decides to issue shares of stock, they're saying they're going to give up some ownership, some control, some equity in exchange for a cash investment into their company. Companies make this decision because the more equity they sell, the more investment opportunity they have for cash coming into the company. This investment money allows them to expand operations, hire more people, and overall just make better products and services so that their business can grow over time. This process of issuing shares of stock is called going public. It's a long and complicated legal process, but basically what it means is that for a company who's gone public, theoretically, any investor, just like you or me, could purchase equity in that company through shares of their stock. Now, once we understand this idea of what a stock is, it's pretty easy to explain the idea of a stock market. Think about a flea market or a farmer's market where basically it's a hustle and bustle of a bunch of buyers and sellers all making trades. The stock market is exactly like this, except for that nowadays it's mostly done over the internet. Buyers and sellers are making cash for equity trades. Buyers are looking to exchange their cash for equity in a desired company. Sellers are looking to get rid of the equity that they already have in a company in exchange for someone else's cash. We've talked about what a stock is and we've talked about what the stock market is, but how can you actually buy stocks? There's an important middleman that we need to talk about called a brokerage. Brokerages are the middlemen through which regular investors like you and I would go through to buy shares of companies. Now, you've probably heard of most of the big financial brokers like TD Ameritrade, E-Trade, and Fidelity. Those guys have been around forever and they've been helping investors invest money in the stock market for years. But there are also some new brokerages, and they're super exciting because they're slashing fees and making it a lot easier for new investors to start out. Also, these brokerages exist through online accounts or even apps that you can get on your phone. So it's super easy now to open an account through a stock brokerage. My personal favorite stock brokerage is Robinhood. I even did a review video on them that you can see here. Robinhood makes it super easy for beginning investors, and they charge no trade fees, so you don't have to fork over any money to start trading stocks. Okay, so we now know what stocks are, a little bit about the stock market, and what role brokerages play in how you can buy stocks. Now, the ultimate question is, why would anybody want to buy stocks? Well, the simplest mantra of the stock market is actually right behind me. Buy low, sell high. The idea is to buy a piece of equity in a company and then sell it later on when theoretically that company has grown and therefore that piece of equity that you bought is now worth more. For instance, if you chose to invest in the company Apple in the 1980s by buying $100 worth of equity through shares of their stocks, you would be really rich right now because Apple has grown so much exponentially. Now, there are a ton of other ways to make money on the stock market, and we'll be diving into those in some of the next videos. For now, just keep in mind the simplest idea is buy low, sell high. Buy a company that has potential to grow or is undervalued at the time when you buy it, hold on to the stock of that company until it's worth more, and then sell it later. Okay, so to wrap it up, we've talked about what a stock is, given you an example of what the stock market looks like and how it operates. We've talked about brokerages and how you can buy stocks through them in order to participate in the stock market. And we've also talked about the simplest model for making money investing in stocks. Now let's talk a little bit about what a stock portfolio is. A portfolio is the accumulation of all the individual stocks or individual stock investments that you have as an investor. Well, with stock portfolios comes this really important idea of diversification. Basically, to manage the amount of risk you take, you want to invest in a bunch of different companies. Modern day economic theory says that owning between 10 and 30 stocks allows you to take full advantage of diversification, minimizing your risk and maximizing your reward, while also allowing you to keep track of your investments and stay educated as to whether those are the best stocks to own at the time. Now, there's a ton of information out there, a million different stocks you can buy, a million different times and ways you can purchase them. I'll never claim to know what exactly the best stocks are to buy at the exact time it's best to buy them, but I do know that keeping it simple really helps, especially when you first start investing. That's why when I first started investing, I took advantage of these financial tools called exchange-traded funds to diversify my portfolio while also keeping it simple. Exchange-traded funds are kind of like buying a fruit basket. You put your money into one fruit basket, and that fruit basket has watermelon, pineapple, I almost said cantaloupe. And that fruit basket has a bunch of assorted fruits in it. Well, just like a fruit basket has a bunch of fruits in it, an exchange-traded fund is made up of a bunch of assorted individual stocks from different companies. So you can buy a tech ETF, and by putting your money in one place, in one fund, you actually end up owning shares of several different types of stocks. This just makes it easier to keep track of and does a great job of balancing and diversifying your portfolio. ETFs trade just like regular stocks with regular brokerages, and you can buy them and sell them just like you would a normal stock. But they're a really useful diversification tool, and they definitely helped me out when I first started investing. Another really important part to consider in building your stock portfolio is your investment horizon and your risk tolerance. Your investment horizon gives you an idea of how long you want to be invested for. So if you're saving for retirement, you might be investing for 40 years and you want to be able to cash out and sell way down the road. But you could also be investing for the next 3 to 5 years, 15 to 20 years. Investment horizons vary drastically across individuals, and so do risk tolerances. The general financial mantra is that the higher potential for reward comes with a higher potential for risk. Depending on what stage of life you're at and what you can stomach and what your goals are, you have to decide exactly what your risk tolerance is, and that will shape the type of investments that you end up participating in. We'll talk more about both of these concepts in the following videos. Okay, so we've talked about what stocks are, what the stock market is. I've explained a little bit about how to buy and why you would want to buy stocks. And then we talked a little bit about portfolios, diversification, and how to make sure that you're maximizing your return while minimizing your risk. Now, there is so much more to learn, and that's why I'm putting out 9 more videos that follow up after this one to teach you more about investing in the stock market. So make sure to watch the series all the way through so that you can learn about the stock market as efficiently and effectively as possible. Follow us on social media for more finance and investing tips and to keep up with what's going on at Wall Street Survivor. Again, please make sure to smash that like button and subscribe to the Wall Street Survivor channel. I'll see you guys later on this week with a new video, and make sure to keep watching all the Survivor 101 series for your simple, efficient, and effective ticket to investing in the stock market. See you guys.